All right. Hey, everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video analysis session. Today is Cyber Monday. I have something to say about that. All right. Anyway, so if you're new here, welcome. Thanks for joining. Let me explain to you how this works real quick. So first thing I'm going to do is I'm going to go over the economic calendar, okay, very quickly. Second, we're going to talk about this Bitcoin situation. I hope you read my article yesterday on TradingView. I am simulcasting on there, by the way. Hold on, let me pull that up so I can see what's going on. By the way, people on TradingView, if you can't see me on TradingView, just refresh the browser. I'm sure someone's going to say they can't see me, and I'll have to remind you. Anyway, so we're going to go over the economic calendar. We're going to talk about this situation here, right? This range-bound situation, and talk about this scenario, which I highlighted on my chart yesterday. And then we're going to talk about the trade of the week, okay? Which one was it, Stian? All right, hey, good to see you. What was it? Was it the pound? Was it the yen one? Was it the dollar yen? It got stopped out. But the thing is, I like to review the trade of the week because there's an important lesson there. And it was a coin. I'm sorry, it was a coin. It was Dogecoin. I remember now. So you have a good memory. So we're going to go over Dogecoin. We're going to take a look at that trade, right? And the idea is, it is possible to recognize context in a way where you can filter out signals. Now, whether that's signals from your own system or if you're using my trade scanner, all right, which there's a great example of this, which we're going to talk about here. All right, so that's what I'm going to go over. And if you have any questions, now would be a good time to put them in the channel. But for students only, all right, people that are students, I'll answer those questions. I can't answer everyone's questions. I'll be here too long. And I talk too much as it is. All right. Also, as a fun fact, if you want to share what city or what country you are from, that's always cool to hear. I am streaming from the greater New York City area, also known as Northern New Jersey. So I talk funny sometimes. All right. Anyway, thanks for watching. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right. Cool. Let's get rid of this slide. And let's go back to the charts. Okay, hold on, just give me a second. All right. Now, all right, so before I get into the chart, right, let's just go over a couple of things here real quick. Cyber sale today, right? Check my links in my description here on YouTube. Check my signature over on TradingView. I have a nice, generous sale for people that are interested in my trade scanner on the yearly packages. If you go to my website, Stian put together this beautiful pop-up for me. Okay, it pops up and then there's a link on there, right? You can't miss it. You follow the link, it takes you to the page with the coupon code. Now, let me explain this real quick. My yearly packages, they're priced in a way so that basically it comes to a lot less, right? Let me explain just so that there's clarity here. The normal package for, like, whether you want an individual package or asset class like cryptocurrencies, or you want Forex, right? Or you want just stocks. If you just want one single market, it's typically $474 for the year, right? But with the savings, it comes to, like, what was it? 270 something, or I forget the price, 281. But if you calculate that on a monthly basis, it comes out to $27 a month, right? You're paying up front, of course, but $27 a month. You're not going to get that price anywhere else, especially for what I'm delivering. All right. For the active investor package, which is all the markets plus all the educational stuff that comes along with that, like my student meeting. By the way, we're having a student meeting tomorrow at 3:30 p.m. I'm going to put the link in the channels soon. But that package comes to like $56 per month, right, after the savings. So those are pretty good prices. Take advantage of that. I'm telling you, it's only going to be good for a few days. We're going to run this for a few days, and then we're going to take off that pop-up. So take advantage of that. And the reason why I'm saying this is there's a lot of value in this bot. Now, if you want to say, well, how does the bot perform? You can look at the website. We have the results tables. There's one on the front page, and then there's a results page. The links are in the description. There's results for everything. We record everything. Now, you'll notice if you look at the results page today, right, on the coins particularly, there's 3 losing trades in a row, right? Bitcoin, Ethereum, and XRP. And you'd be like, wow, this thing sucks, man. It calls losing trades. Let me tell you something. If the bot was producing tables and tables of green trades, that would be a red flag, because there's no such thing as a 100% or even 99% win rate system. There is no such thing. So when someone tells you that they have it, they are lying to you. All right. We are the opposite of that. So we are transparent. These trades are real. I mean, look, I could be deceptive and say, hey, let's just filter out the red trades, and all you see are green trades. Oh, this thing's magical. Sign me up, man. But we show reality. All right. Now, what makes this system, what increases your chances of a positive outcome is not the win rate. And I've talked about this before. It's about the fact that the bot will make more than it loses, right? It's a 1.5 to 1 reward risk, fixed reward risk ratio. Now, we're working on an update. I just want you to know, right? We haven't implemented this yet because we had other things we had to do. But the next update that we're going to implement is the winner rider module, I'm going to call it. Okay, so that the bot can at least help you ride winners. So we're going to implement something in there, a filter that will call a secondary exit, right? The secondary exit will not be a predetermined one. It will be one that's more what I like to refer to as a natural exit, where basically some sort of signal, sort of like a trailing stop, is touched, and then it sends out the notification, hey, get out, right? So what that does is that skews the reward risk over time more in your favor. So instead of having a 1.5 to 1 reward risk on every trade, you will have more of an average of like 2 to 1, maybe 3 to 1, something like that over time, which increases your chances of a positive outcome overall. Now, I am willing to bet right now that my bot, even with the losing trades, will beat you. All right. Over time, over 6 months, over a year, it will do better than you. And that's with the red trades. Why? Why will it do better than you? Because number one, it follows the same system, the same signals over and over. It doesn't get caught up in nonsense. It doesn't have any emotional baggage. It doesn't follow news. It doesn't fear missing out. All the things that people have problems with. It doesn't have those problems, number one. Number two, it removes the whole thing about where to place to stop, where to place to take profit, right? It has it set. It's fixed every single time it comes out. So you know in advance, right? Oh, I put the stop here. I put the take profit here. It doesn't change. It stays the same, right? And it follows it. And number three, the bot, when the market environment changes, we adjust it. So we can always keep up with if the market gets, weird or something, or volume goes away, we can make adjustments for that. So you don't have to worry about, oh, this isn't working, right? The bot doesn't jump from system to system or strategy to strategy, or 1 minute it's using, the RSI, and then the other minute it's using a stochastic and all this other nonsense. The bot also doesn't follow fake gurus. So I'm telling you, it will beat you. Now, the good news in all this is the bot can be beat. And that is the point of today's stream. I want to talk about that, right? And that's what I mean when I call this using context to filter signals. Now, if you took a moment and read my TradingView article yesterday, which no one read because my numbers are horrendous. I wrote like a nice article, and I'm like, oh, this is one of my better articles. No one read the article, right? I have like 500 views on there. I usually average like 1,500, 2,000, which is still pretty bad. But man, no one read this one. And this one, I outlined the short, okay, that came off of this level. It's there. Read the article. Now, I mentioned that because we're going to get into the charts here in a moment. But anyway, so that's what I said. Go to the website, take advantage of the cyber sale, and let me know if you have any questions about that. All right, cool. Hey, Milad, how are you? So let me just, before we get into the economic calendar, let me just say hello to a few people. Kai, good to see you. Steen, yes, I'm going to answer your question. Good question. Isaac, hey, Isaac, I sent you a private message in the server. So check that out. Because active investors, by the way, who are my previous yearly members, they get a special coupon. Isaac, you're one of them. So let me know. Check out that message. Bill, good to see you. All right, Avi, how are you? All right, cool. Good to see you. So now, Avi, from Israel, hope everything is cool over there. Could you please talk about SPY? Yeah, I'll get to those things, but just keep in mind, I'm answering questions for students. But you're a long-time follower, and some of those things I can get to, so no problem. All right, cool. All right, Isaac. All right, so you saw my message that I sent you? I just wanted to give you that heads up. All right, let's take a look here. Oh, so if you're in, I'll send you the coupon. You guys get special ones, so please keep that in mind. The sale that you see on the website right now doesn't apply to you guys, because you guys gave me a chance a year ago when I had no trade scanner at all. There was no robot, and you guys gave me a chance. So I got a special coupon for you. All right, now let's talk about the economic calendar real quick. All right, because this is important. You guys should go through this every Monday. Check out the economic calendar. You can check the one on TradingView. You can check another one. It doesn't matter. Now, let's talk about what we have this week. All right, so we're going into the first week of December. Tomorrow, which is the 28th, we have what? Bank of New Zealand. They have their interest rate decision. Now, Bank of New Zealand is not a big market mover. It's not a global market mover. So I wouldn't worry about that unless you have some Kiwi pairs. But otherwise, don't worry about it. We have, there was a couple of other items on the calendar for like Bank of European Central Bank, and I saw some stuff for China. I wouldn't worry about those items. But on Friday, we have what? ISM non-manufacturing or manufacturing PMI, which is not really a big mover. I wouldn't worry too much about that. But Stian, you got it. Friday, we have Chairman Powell speaking. That's my Seinfeld impression, in case you don't know. Chair Powell speaks on Friday, which is the 1st of December. Now, normally, Friday, the first of the month is usually non-farm payrolls. We don't have non-farm payrolls on Friday. Obviously, they're moving it to the next Friday because obviously someone was on vacation and they couldn't get the report together. I'm just joking, but I'm just saying normally it's the first Friday, but we don't have it this Friday. But we do have Chairman Powell. So keep that in mind. He may say nothing. He may say something significant. If there's any change in his whatever, if he gives the market some sort of thing to react to, you can see a range expansion, very dramatic, very quickly. So please keep that in mind. All right. You don't want to try to trade what he's talking. You want to mitigate risk. So if you're in positions going into that, you might want to maybe take profits off the table if you have some. Maybe not take a signal if there's a signal going into it. You get my idea. All right. So thanks, Stian. So yeah, so that's the main thing with that. All right, cool. Hey, Alex, good to see you. So let's now talk about Bitcoin, shall we? And we'll get into this here. I'm going to make my chart bigger. Let me know, guys, if you have any questions about the economic calendar. So let me make this bigger here. Okay, cool. So let me open this up so you guys can see. Now, if you read my article yesterday on TradingView, I talked about this range, okay? I talked about this range, and it was confirmed because we have a few touches off the range, right? Look, we have 2 touches off the support, 2 touches off the resistance. This squiggle that I drew over here, this right here is the scenario that I anticipate. Like each week I'll draw like a squiggle or some sort of illustration of where I think the market may be going. Now that's based on price structure levels, the components that I use to evaluate markets. I'm not always right, all right? But, and this is just one scenario out of countless scenarios. I don't know if the market's going to follow this, but this is what I suspect. And if we see confirmations, then you are better prepared. Also, in that article, I mentioned 37,200. If you read the article, 37,200 was the entry for a day trade short. Okay, I wrote that. Read the article. The words are there. I said, if it reaches that level and takes it out, it's a reference point for a day trade short. And I said, look for a move to maybe 37 even or 36.90, whatever, right? What's today's low? 36,727. So it went even further. Now, why day trade? Most of you answered that correctly a week before. It's because the general trend is still bullish, right? And you don't want to be overly aggressive with counter trend trades. I mean, going short to begin with is aggressive when you're going against the trend, right? But there was some movement in there to capitalize on. You just keep your expectations low. Now, that was all. I outlined all of that in my article yesterday. Anyone read it by any chance? Probably not, because again, I got like no views. Now, the other thing is, when price reaches this level, right, the 35K support, that's going to be where the high probability longs are on the swing trade time frame, right? Makes sense, you guys? We went over this a week ago. So the resistance is a place to go short, but you have to have lower expectations because it's against the trend. Supports are a place to go long, but because it's on the side of the trend, we can have a greater expectation. It's all about how you adjust your mindset based on the information that the market has given us. Understand that technical analysis in general is the use of historical information in an attempt to forecast what will happen in the future. Now, understand that markets are mostly random, but they're not always random. This is a very important concept. So there are tendencies, and these tendencies come from human behavior. That is why patterns repeat themselves in the market. That is why the market has a memory, because people still trade. A lot less people, but people still trade, right? So as long as we have a significant percentage of people in the markets, we can capitalize on these patterns. Now, let me talk about the subject of today's stream, which is using context to filter signals. Now, the robot, okay, the trade scanner, called Bitcoin, it called Ethereum, and it called XRP long yesterday. Now, I had just finished writing my article that Bitcoin's a short, at least as a day trade. So let me ask you guys a question. The bot tells you to go long. I tell you to go short. Who do you listen to? Who do you listen to? Me or the bot? Actually, that's probably not a good question. Many of you who don't want to get me mad, you'll say, "Oh, I'll listen to you." I'm not going to get mad. Who do you listen to? Me or the bot? Bot says long, I say short. Well, obviously we know that I was right and the bot was wrong, right? The bot got stopped out. Okay. But my point is this. Why was I calling this short? It's because clearly there was a resistance here. Not only was there a resistance, but there was a confirmation to go short. All right. And I called it before the confirmation. We had the red candle. I said, we take out that low, this thing is a short. The bot was calling a long. Now, mind you, the trade scanner looks at smaller time frames. So here is the key. When the robot calls a long in a clearly defined resistance zone, is that a trade that you would consider a high probability or a low probability? You guys tell me real quick. I want to see it. I want to see in the chat here. If the bot calls a long in a resistance zone, I don't care if the trend is generally bullish, if it calls a long at a resistance, would you classify that as a high probability long or a low probability long? High probability? You're joking, right? You must be joking. The robot calls a long at resistance, high probability long or low probability long? Kai says low. Isaac says low. You guys are correct. Stian says low. Yes. So this is called context. Now understand, the robot uses a smaller time frame, so it cannot see this. In fact, Stian asked me, we talked about possibly programming the functionality into the bot where it can define support and resistance and then filter out these trades. That would have been 3 stop outs that would have been filtered out. That would have been cool, right? But so the point is, though, by using the bigger picture, you have a sense of context. If that's a low probability long, you now have a choice. You can say, well, I don't take low probability trades, so I'm going to avoid this trade. That's choice A. You have choice B. You can say, but you know what? I'm aggressive. I like to trade. It's a low probability long, so I'll adjust for that extra risk. I'll take a smaller position. So instead of 1 Bitcoin, I'll buy a quarter of a Bitcoin, or I'll buy half a Bitcoin, right? Instead of a full Bitcoin, for example. And now the trade gets stopped out, you lose less. Do you realize the formula to making money in this game is you make more than you lose? So if you're able to reduce your losing trades to smaller amounts and a lower frequency, you now increase your chances of being profitable over time. That's really the key. People are instead you're looking for home runs, they're looking for magic, they're looking for this, they're looking for that. You got to stop with that nonsense and stop consuming this garbage all over YouTube and whatever else. Okay, really, do yourself a favor. Everything you need is on a chart. But my point is this: you can beat the bot by recognizing context. And context said here, this is not a good place for longs, right? So guys, you tell me. And on top of all that, I wrote an article saying that it's a short. So even if you were clueless about context, if you made the effort to read my article, you'd be like, he called it a short up here, and the robot's calling it a long. Should I take this robot trade? Right? That shouldn't be a question that you're confused about. It's like, oh, it's low probability. I probably either shouldn't take it, or if I'm going to take it, I take it small, because chances are it's not going to work. Right? That's context. And whether you're using my signals from the trade scanner or you're using some other kind of system, it's still the same. If a system is calling a long up in this area, that's a low probability long based on the location. Now, low probability doesn't mean it's guaranteed to fail. Low probability means it's just got a low chance of doing this. But sometimes, some news could come out of nowhere. Like, I don't know, SEC approves, blah, blah, blah. Next thing you know, Bitcoin's at 38K. And all the geniuses that called longs, oh, I told you I was right. You see, I'm a genius. Right. Unless you have a robot that can forecast news, or unless you had lunch with Gary Gensler and he told you, oh, yeah, by the way, we're gonna approve this thing tomorrow. Just so you know. Don't tell anyone. Right? That is called random. Right? It just comes out of nowhere and it dramatically changes the signal on the chart, right? So you have to understand that's the random nature of the market. Now, so if Bitcoin goes to the support 35K, right? Let's say Bitcoin pulls back to here, like my little illustration shows. Don't know if it'll get there, but if it does, would you classify this area as a high probability area for longs or a low probability area? What would you guys say? High probability or low probability for longs? Let's see what you guys say. Let me look over here at TradingView. I see some people typing some stuff. Okay. Oh, from South Africa. Welcome. All right. Okay, cool. Yeah, I'm not vicious. I'm nice. I'm nice. Okay. Multi-time frame analysis, support and resistance zones. Great. Okay. So, hon, who considers their broker fee into buy and sell? Okay. I mean, you should consider the fees, but that's going to be most significant if you're like a very high frequency trader. Swing trades and like larger position trades, the fees aren't really as significant, but they're there. Okay, so you guys are saying high probability. Yes. Okay, that's obvious, right? So now let me ask you this question. If the robot calls a long in the midpoint area, calls a long here, how would you classify that? Again, I'm teaching you guys context so that you can beat the bot. And I believe it's possible because I see these things all the time. When Bitcoin was testing 25K a little while back and the bot was calling everything short, I warned people in the chat. I said, be careful with these shorts. This is not a location for shorts. Right? And all those trades got stopped out. So again, it was possible to avoid those. By the way, we're working on a way where I can actually send notes out to all the channels and possibly even email. So I can actually send you these context ideas in a quick note. So now, it makes it a little easier for you. We're always looking to add value. We're working on that. Okay. So that's coming next, people, just so you know. So Stian says gambling. Random. Okay, so you guys, that's generally the right answer, right? I mean, that's how we should view this from a context perspective, right? It's the midpoint, highly random. But I'm going to say in terms of the bot, in terms of the trade scanner, if the trade scanner calls along here, that is not the resistance. So that's acceptable. Like that's a reasonable trade. Yeah, it's going to be more 50-50. Right? So you could be a little more conservative if you want, but that's a lot better than this. That's what I'm trying to compare here. Like if the bot calls the long here in this area, that's a better location than this area. Does that make sense to you guys? And here's another question for you guys. If the bot calls shorts in this area, which shouldn't, but if it starts calling shorts in this area, how would you classify those shorts? Right? Bot starts calling shorts up 35K. And it's calling Ethereum, it's calling XRP, it's calling Dogecoin, it's calling all, and so you see the thing short, 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 short. What do you think? Should you go short? How would you classify the probability? At least to me, the middle of the range is low. Even so, the swing may be right. So answer that question, and then we'll finish this point here about the midpoint. Okay. Right. So the midpoints are typically 50-50. Midpoint, especially a midpoint of a range. But now we're talking about the trade scanner. Now understand that the trade scanner uses a smaller time frame. So a smaller time frame, right, at this midpoint may find a support in here, and it may bounce. And I believe that if the momentum turns and the trade scanner confirms, since the general structure is bullish, there may be a slightly better chance that it tests the high. And in that case, you're going to get taken at the take profit, right? It's going to go to its take profit. The bot has a 1.5 to 1 reward risk. It's not like it's looking for a move to 50K, like half of these frauds on YouTube. It's looking for a reasonable move, right? It's proportional. Does that make sense, you guys? So would you guys say that you're better prepared to use those trade scanner signals after I show you this lesson of context? Do you see what I mean by context? And on top of that, like I said, I'm going to be able to share notes soon so that, I can add this context that I'm talking about so that it's less work for you. What are you guys saying over here? Do you use wave counts? Man, you're asking a lot of questions. I do. It's part of, wave counts are secondary, and it's part of my training program. I teach people how I use the wave counts. It's actually pretty simple. And I use fibs too. Yeah, those are all secondary. Those are secondary confirmations. So I'm not going to go over that here, but that's all part of my training program. My students know all about all that stuff and how it fits into my general system or my process. All right, so you guys clear? Are you guys clear on context? I want to make sure, give me some yeses, give me some nos. Let me know if you have some questions about that. I want to make sure you're clear. So here's my point. It's not hard for you to figure out support and resistance levels. Anyone can do that. All right. You simply use the horizontal line tool. You look for reactions at previous levels. Okay. You project them forward here, like going back here, right? You project them forward. There was a reaction here. You can draw a line there, right? When you project that forward, as you can see, there's a reaction in the future. If we had no idea, if the market looked like this, right? There's a reaction in the future. Now, that's a tendency. That's not a guarantee. Just like over here, you could say, well, look at this resistance, right? Resistance drawn up here. And you could say, market's going to be a short. Well, it might, but look, market blew right through it like it wasn't even there. That's why confirmation is so important. You don't just draw a level and then say, I'm going to short this here because there's a resistance level historically and it should work, right? The market can just bulldoze right through the level. And confirmation helps you avoid getting caught in those situations. Trust me, much earlier, 15 years ago, I'd say, I was the kind of person that would short something like this without waiting for confirmation. I can tell you plenty of stories, all right? When it blows through a level, you then adjust and you find new levels. So as long as you're updating your charts and you're projecting these levels, you have a sense of context and you have a better view of the market than the bot does. The bot is looking for specific momentum-based criteria, and it cannot see the bigger picture, not yet, okay? But you can, and it's not hard. And that's really part of like the educational component, like where I'm trying to teach people is you can evaluate the bigger picture. Anyone can do this. It's not hard. And then you can put the signals into perspective. The signals are the hard part. That's what takes 15 years to figure out, is how to come up with those signals. All right. That's how long it took me. Okay. So yeah. All right. So you guys got that. All right, cool. So let me know if you have any questions about that. Let me see over here on TradingView. What are you guys saying? Okay, cool. Got that. All right. So now what I want to cover here next real quick is I want to talk about Dogecoin. All right. We're all pretty much clear on Bitcoin. Let me ask you guys another question real quick. How many of you took that Bitcoin trade or Ethereum trade? Any of you taken that and got stopped out? Anyone? Because again, that type of stop, that was one that you could avoid. All right. There are some, look, that are going to get stopped out, and there was no way to avoid that, right? There's no such thing as a 100% win rate system. I know I keep repeating myself, but you need to hear this. There are going to be some that get stopped out, but I believe that you can do better than the bot simply by recognizing contextual situations that you can apply some sort of reasoning to, okay? And basically assign a loose probability. Oh, this is low probability. Oh, this is high probability, okay? And then from there, your decision-making tree now becomes a lot simpler. I either A, don't take trades, or B, I can take reduced risk trades, right? The easiest thing to do is just not take trades. Easiest thing in the world to do, especially with the trade scanner. It calls lots of trades. All right, just look at the record. Look at the trade record on the website. There are lots of trades on there, right? It calls at least 3-4 trades a week, something like that. The stock one has been slow. I got to see what's going on there with the stock one. It's been a couple of weeks since it's called a stock. It's the raw scanner has been calling the stocks, but the filter has been filtering everything out. I may have to expand the range of stocks. Okay, so I'm just going to chat here. Any questions about this Bitcoin situation? I want to review Dogecoin next. All right, so now Steen asks about coin. All right, let me just do a couple of Q&As real quick. All right, so coin is Coinbase, the stock. Now look at that. That's interesting. All right, what's up with that? That probably has to do with Binance losing its, the Binance situation where CZ got. He had to resign. I wonder why. I wonder what that had to do with. Anyway, that's interesting. So Steen's question about this is, it's at resistance area. If it breaks, the next resistance would be around 155, Steen says. 155. Let's just put that on the chart. Yes, Steen, you're correct. That's a previous support. I'm looking at the weekly chart here. Yes, that is correct. But the thing is, a break takes a while to confirm. Like, I would consider that this is like, some people may say, oh, it broke. I would not consider this a break yet, because this could be a failed high right now, right? A break would be you're pushing like this midpoint area. Okay, it's broken, right? And then at that point, I would be much more optimistic about that 155. Does that make sense? So yeah, but you are correct. This is a nice looking chart. You have a higher low. It's pushed a higher high. To trade something like this on the long side, you wait for a pullback, right? And this would be the pullback area right around here, which is what? What is that? 199, so around 200. Is that right? No, I got the wrong numbers here. Hold on. I can't see anymore. Let's see. The high there is 95. Yeah, there we go. 95. What's this high over here? This here actually is 88. Yeah, so 90, around 90. This thing pulls back to 90-ish. That might be a decent place for swing trades on the long side. Okay, but nice move. Obviously, that's news driven, because previous to this move, right, this chart it came off the resistance and looked like it produced a lower high, right? But look where it was messing around. I mean, look at this. Look at this. Look at the activity in that area, right? You had activity here. Okay, you see that? Activity here. Look at that. And it retested here. You see that? So there is memory in prices. Prices aren't 100% random. If they were, you wouldn't see that type of phenomenon. People have memories. This is a reflection of human behavior. And there is a human element. Although we're mostly against bots these days, there is still a human element driving the market. And as long as there is, we have opportunities. Okay, it's just harder and harder as markets get more and more efficient, thanks to the rational behavior of robots. That's why I built the robot, one of the reasons. And I'm not even a programmer, but I figured out how to get my criteria into an automated way, and it's a very useful tool. You realize that thing basically shaves 10 years off your learning curve, and that's no exaggeration. I don't want to sound like a used car dealer. It literally shaves 10 years off your learning curve when you use a tool like that. All right, so let me just go back here all the way. I told him he gets scammed, but he wanted it to be true so much so that he felt, Okay. All right. I'm not sure what you're talking about there, Kai. Someone got scammed. All right. So let's. All right. So Avi has some questions here about the Qs. That's something I usually go over anyway. So let's just take a look at real quick. Let's take a quick look at the. We'll start with the bond market. Okay. Now look, the bond market has been trying to build a bullish structure. You see this? This is the daily chart in the bond market. Higher low, higher low. Looks like we're going to go for the higher high. We have Chairman Powell speaking on Friday. Maybe he'll move things along. This means rates are coming off for now. But again, look where we are. That's an old support, new resistance. The resistance was acted upon, and now we're testing it again with a higher low. There's a possibility now we continue higher. We still have more resistance, though. So you can call this a resistance zone. If we fail in that zone, then we're just being fooled. Like rates aren't really going anywhere. So don't be fooled by that, by these temporary changes, right? Where rates look like they're improving. We can't really call this a bullish trend on the bigger picture yet. We can call it a bullish trend on the smaller picture, right? If you day trade the bonds, I don't know who would do that, but if you day trade the bonds, then yeah, sure, you can call this structure bullish. But on the bigger picture, not exactly, right? Maybe this thing goes into a range. We need to see how this thing messes around that resistance zone before we can start making judgments and saying, well, looks like rates are coming off. We can start investing again, right? Or it's safer, or I shouldn't say safer, but it's more favorable now to have money in the market because as rates come off, more money will come in. That's typically what happens, right? Let's take a quick look at the NASDAQ, right? This is the QQQ. NSX, let's go to NSX USD. These markets have been ridiculous, right? This is just ridiculous. I know I sound biased. This is just ridiculous right here. Moves like that, but it is what it is, right? Don't get in this thing's way. Whether you believe it or not, markets can be irrational. They can ignore what the bond market is doing, but the bonds are trying to improve. The point is, this is most likely Santa rally, right? This is the future being priced in where they figure Powell has to pivot or he has to come off of the rates, like he can't keep raising, whatever all that nonsense is. I don't get all confused by that. I simply see the chart structure and say, okay, that's bullish. This generally is a failed low, okay? The general structure on this thing is bullish, and we have a higher high, slightly higher high. So you don't sit there and short this thing, not as a swing trade. As a day trade, sure, I can see that, but not as a swing trade, right? This thing is strong. It's the NASDAQ 100. This thing pulls back and produces a higher low in an area like that. That may be a nice place for swing trade longs in terms of stocks, tech stocks, NASDAQ stocks. You know what I'm talking about. All right. These areas right here. Look at these old resistances. You see this? These little areas right here. That would be a higher probability location for a long, which would basically translate into this. And speaking of fibs, you can do a proportional measurement, right? That's what fibs are, proportions. And you're going to look at your 382 or your 50 in this area. And that's where you want to see price. And you get a confirmation to go long, you have yourself a long signal at that point. At this point, I would not touch this thing. I wouldn't go short because let me tell you, these markets, we're in Santa rally season, and these markets can stay irrational. This thing may not pull back at all, and you may see another squeeze higher, like something like this. Very possible. So that's why in those situations, if you're going to do anything, really, you should stick to like day trades so you avoid the larger magnitude risk on both sides, right? So that's what's going on generally there. I mean, the S&P is the same deal. All right, quick look at the S&P. Right, same deal. It's the same deal. It just hasn't made that higher high like the NASDAQ, and we're fooling around this resistance. So, like I said, don't get overly bearish and be like, oh, it's a short, because take your Captain Obvious hat off. This thing can squeeze through. Right, markets can stay irrational, and some stupid news comes out, some fake news comes out, whatever. Don't get caught up in that. News can make things very confusing. All right. So I think I got to that. All right. So real quick, Bill says here, okay, bullish channel between it. We've had bullish news in Binance, right? But somewhat weak price reaction. Okay. Now, monthly close coming on Thursday should stay above 35K. All right. Just Bill giving his observations here. Okay, cool. Thanks for sharing. All right, I'm just looking back here. ETF approval would send us to 46K, but that'll be a sell then use event. All right, because everyone's positioning now. All right, cool. Just catching up there. All right, now let's talk about Dogecoin real quick, shall we? I know I'm talking too much here, but we got a couple minutes. Let's just do this. So Dogecoin, right? Here's Dogecoin. Dogecoin was called by the bot a week ago. Now we're going to go to the 4-hour chart. This was the trade of the week a week ago. By the way, if you want to sign up for trade of the week, link in the description, link in my signature. It's a free trade that the trade scanner sends out every week and it rotates. So a week ago was Dogecoin. This week, it should be a stock. Okay. Now it's been slow on the stocks. I have to research that further, but this week we should see a stock come out as trade of the week. Next week, we should see a Forex pair. And the week after, it reiterates, right, and goes back to Bitcoin. It goes back to a coin. Make sense? That's how that works. So it called Dogecoin long, right? Let's take a look at that on this 4-hour chart, and let's examine that a bit here because that trade was stopped out. So let's go back a week. When was that? That was like back here. Was that back here somewhere? Let's see. A week ago was what, the 21st? Around here. So is that right, Steen? Maybe you want to share the trade idea. Dogecoin is at 23 Q1 close level. Okay. What was that Dogecoin trade? Anyone have the numbers? Steen probably has the numbers. Got those numbers? All right, because I know it was around there somewhere. All right, the trade was called around here somewhere. It was probably called around there. Or no, I'm sorry. Hold on. I think I know where it was called. It was called here, right around here. Okay, see that? You see that? Now, okay, look at this. So I want to point this out because look what happened after, right? This is where, I believe this is where it was called, right here. They called it long right there, right? Trade Scanner sent out a trade of the week. And I remember looking at that and saying, oh, guys, it's a reasonable trade. It's coming off of a failed low area. But look what happened, right? It just got hammered after that. Now, this was not called at a resistance like Bitcoin. This was a pretty reasonable trade, right? And it got stopped out, got stopped right out, and then eventually came back. Okay. So please keep that in mind. Like, these things are going to happen. That's why I want to review these trades, because before the fact, right? Before the fact, this thing looked decent here. In fact, let's erase all of this price action. Let's hide that, right? It looked like this. This is what it looked like when it made the call. Okay. It looked like this, probably something like that with that bullish pin bar in there, something like that, right? That's what it looked like. Okay, I just went long. Okay, he's talking about Dogecoin, right? So the robot called the long here, right at around this level, and you can see that's what it looked like. And even looking at this now, I'd say, well, that's a reasonable level. So my point is, if you had used context to consider this trade, the trade would have made sense, and you would have gotten stopped out anyway. So that's the point that I want to make. Understand that this thing is not perfect. There's no such thing. It got stopped out, and eventually it came back. Okay, eventually. So I don't think it called the second signal. I don't think it called the second one. I have to check. It calls a lot of signals. But that's the point, is they're not always going to work. All right, so please keep that in mind. And was there anything else that you could have seen here that could have said, all right, you know what, I should avoid this trade? Not really. I mean, you had the supports. Bitcoin was generally long. What was Bitcoin doing at the time? Let's take a look, because that can also give us some cues, right? Let's go back to that same time. That was around here. So this is where here, let's erase all this stuff. It's confusing, right? Let's erase some of these things there. So look at this. Let me open this up a bit. Now take a look at this. This is a little more advanced. This is a little more sophisticated, right? When that Dogecoin trade was called, Bitcoin was like around here somewhere. Okay. If Bitcoin was fooling around this area right here, coming off that resistance, that could have been a red flag for you and be like, Bitcoin is sort of bearish, coming off of a bearish area, and Dogecoin is being called a long. What do you think is going to happen? And in fact, if you go back to the previous stream, go to the previous week's stream, I had mentioned that. Go back and listen to it. It's still there. If Bitcoin pulls back, I said that Dogecoin is probably going to get stopped out. And Bitcoin pulled back and Dogecoin got stopped out. So this has nothing to do with the Dogecoin chart, but it gave us a clue, right? So you can gauge probabilities that way as well when you use the leader. Bitcoin is the leader. You can treat Bitcoin like the S&P, right? The S&P is the leader. The NASDAQ is the leader. When you're comparing stocks, you use one of those indices to kind of get a sense of, what are the chances if the NASDAQ continues? Is this stock going to do better? Right? Theoretically, it should, right? Unless it's relatively weak. Does that make sense? Very important. So you can use that type of context to help you with the trade scanner as well. All right. So let's go back to the daily chart. All right. So I think I pretty much covered everything here. Let's go back to the daily chart. Right. All right. So as far as the week playing out here, you see this is the scenario that I anticipate. Now, if the trade scanner calls long here again in the midpoint, again, keep in mind that it's got a better chance, I think, than being called long at a resistance. Just keep that in mind. All right. If this thing works its way all the way to the support and doesn't call any longs until it gets there, that's even better. All right. So guys, if you have any questions, you know where to find me. You can check out the server, join the Discord server. It's free. There's a link in the description, and take advantage of my cyber sale. It's only a couple of days, and you're getting some really good prices for a very valuable tool. All right. So check that out. All the results are on the results page. Check out all those links. All right. Let me just look through the chat here and see if I have any other questions. Sometimes I miss these questions. By the way, if you have a question for me and I missed your question or whatever, please, you could send me an email. You could reach out to me in the server. And by the way, I don't reach out to people in the server. So if you get a strange message from me, it's probably not me. Just want to put that out there. Report the scammer. We have a scammers channel. You can report them there. Just so you know. Okay. But you reach out to me and I will answer you back. Okay. Just looking back here, looking back. All right. I don't see any questions that I've missed. All right. So Tillin, yeah, we answered that ZN question. It is improving. Like I said, it's improving slightly, but it's still too early to make any major judgments on that. All right, cool. All right, Isaac. Yeah. So Isaac, I'll be looking for your message. And that's that. Let me see on TradingView anything, you guys. Let me see. Okay, I don't see anything there. I think I got everything. Tip for all. Oh, we got draw a line. Oh, okay. So this guy's a fake guru, basically. You fake guru in my chat. Also, copy basically anything in your chart. Select first, hold control. Oh, all right. It's just teaching you some chart stuff. Don't fake guru my chat, man. All right. My people, by the way, quick note for people that are trying to build a following. You don't build a following by going to other people's streams and then trying to get attention. So people, oh, I'm going to click on this guy, especially my stream, because my people are trained. My people know about the whole fake guru game. Okay. So that's not a good way to get followers. You want to get followers, you produce good analysis and you put it all over the place so the whole world could see it. Write a lot of articles, produce a lot of content. That is how you get a following, not by going to other people's streams and trying to get attention, just so you know. All right. All right, you guys. So again, thanks for watching. That's my rant for the day. Let me see. Anything else here? Hold on. Okay. Yeah, got that. Got that. All right. All right, you guys. All right. So again, thanks for watching. Enjoy the rest of your day, the rest of your evening, wherever you're in the world. And thanks for watching.